Hi everyone, hope you're all doing well, keeping safe, keeping healthy. Hopefully you're all managing to get by at the moment. Obviously this isn't a nice time for anybody, certainly business owners, self-employed, etc. But all you can do is keep going, keep pushing through. Do what you can at the moment. Don't forget this situation will come to an end. And if some of your businesses have to stop trading for the time being, don't forget it's temporary. Get yourself through the current period. Use as much help as there is available. Ask us just to make sure that you're doing everything you can and make sure we're helping you as much as we can. Tonight's a bit of light relief. So this is just a bit of a checklist for pre-tax year end. So most of you will know Sunday, 5th of April, end of the current tax year, and then as of Monday, new tax year starts. So I just want to make sure that in light of everything going on, we haven't forgot that Sunday is the end of the tax year. So I just want to quickly run through, and I mean quick, this won't last as long as the others. Just want to quickly run through some things that you need to be thinking about between now and Sunday. Okay, so we're going to start with personal tax. So this is affecting anybody who does a personal tax return. So we're just going to run through some of the main points. So to begin with, pension contributions up to 40k limit. So basically everyone in the UK is allowed to contribute £40,000 into their personal pension pot. Anything up to this limit is tax-free. So it's only once you go over 40k during the tax year that you start to get charged. So if you've not made use of your limit, just a reminder that you are allowed to put up to 40k per year into your pension pot tax-free. Gift aid donations and ISAs. So if you have any savings and aren't making use of an ISA, now's maybe the time to quickly think about it. You're allowed to put a certain limit in your ISA every year, and again, the interest on that ISA becomes tax-free. So at the moment, if you've just got it in a normal savings account, you're probably getting charged tax on any interest earned. But if you pop it into an ISA, no tax on that interest. So you've got between now and Sunday to make any more contributions and make use of your allowances. Same with gift aid donations. So if you're thinking of making gift aid donations or charitable donations, certainly in light of everything going on at the moment, just have a think about getting that done before Sunday, just to make sure that your tax advantages happen on this tax return. Inheritance tax exemptions. So this may sound morbid, certainly in the light of everything going on, but everybody gets an annual allowance, and if you haven't used the prior years, you can use that as well. What that means is you can give away gifts for that amount in each tax year, and those gifts are then exempt from inheritance tax. So worst case scenario, if something happened, as long as your gifts were under that value, then it would be exempt anyway. So if you were going to give away gifts, again, if you're going to give away anytime soon, you might want to quickly make use of this year's allowance before it disappears as of Sunday. Capital gains annual exemption, 12 grand. So again, anytime you sell something of value, sell an asset, then there's usually capital gains tax associated. So be that shares, etc., shares, properties, etc. Everybody gets £12,000 limit. So that's the gain, remember, not the actual proceeds. So if you make a profit on the sale, the first £12,000 each year is always tax-free. So again, if you haven't used this year, you've got until Sunday to use that. Marriage allowance, so you can only go back 1 year. So after Sunday, you'll only be able to go back to the 1920 tax year, because we will then be in the 2021 tax year. So if you wanted to use your marriage allowance and you haven't used the previous years and you can and you're eligible, you've only got until Sunday to make that claim. EIS and SEIS investments, again, same type of thing. So tax relief 1819 and 1920. Claims to be made by Sunday. You'll know if you have these, basically enterprise investment scheme and small enterprise investment scheme. This is when you invest your money into a small startup or a new startup, and there's lots of tax advantages for doing so. So if you ever have any money and you want to invest in something, something to think about, there are really good tax advantages on investing in a small sort of startup under this scheme. Entrepreneurs relief. So most of you will be business owners. If you ever sell your business, there will be tax to pay, something called capital gains tax, as I mentioned a moment ago. So as I said, if you sell your business and you make a profit, the first 12k is exempt. Anything over that becomes taxable at CGT rates. However, if you are able to use Entrepreneurs Relief, basically instead of you getting charged at capital gains tax rates, you'll get charged at entrepreneurs tax rate, which is actually just 10%, so much lower. So if you're going to sell your business at any point, you will end up using Entrepreneurs Relief. The message I wanted to make sure here that you knew is that from March, so last month, the limit went down to 1 million to use Entrepreneurs Relief. Sounds like a lot, and I'm sure for a lot of you listening, that's more than enough still. But I have been involved in the last year or two with businesses who did make gains more than that, so this would affect them. UK resident capital gains tax from April 20. So if you sell a property and you have to pay capital gains tax on it, so if it's not your prime property and it's a second or additional property, you will know that you have to pay capital gains tax on that gain that you make from the sale. But the change now from this month is that you have just 30 days to complete and pay that tax and declare it to HMRC. Okay, so it's not like previously when it would just go on your next tax return. When you now make a gain on the sale of a property, you have to declare it and pay the tax within 30 days of that sale completing. So that's quite a big change that's now kicked in. Also, if you transfer a property now between spouses, the transferee spouse takes over the transferor's spouse's ownership period and use of the property. So again, that's relatable to when you come to sell that property. PRR, so private residence relief. Some of you may or may not have heard of this. So as I said before, usually when it's your own main property, there's no tax payable, there's no capital gains tax on the sale. I'm sure most of you know that if you sell your own house, you don't have to pay tax. That is because of PRR. So what happens is if you've ever lived in that property and then rented it out, you can still get some PRR relief. So the exemption has now been removed, except where the property owner remains in occupation with the tenant. Sorry, the letting exemption, not the full PRR exemption, the letting exemption. Won't go into the detail of the letting exemption, but just to note that if you come to sell an additional property and you want to claim PRR, the letting exemption part of that has now been removed unless the owner remains in occupation with the tenant. The other part of PRR is even if, as I said, it was your main property at one point and then you come on to sell it at a later date after renting it out for a bit, as long as it was your main property and you lived in it at one point, they always used to include the final 18 months of ownership as relief as though you lived in it. That's now been reduced to 9 months. So what that means is if you owned a property and you lived in it, then you let it out for a while, when you come to sell it, they will class now the final 9 months as though you still lived in it and you'll get relief for that final 9 months. But that's gone down from 18 months. Okay, so the next checklist I want to just quickly walk you through is for limited company owners. So again, a lot of you listening will own a limited company. So a couple of points just to think about between now and Sunday. So dividends, last week to declare any dividends, interim or final, in this tax year. Remember the rules. Okay, so this is quite a biggie. I'll spend a couple of minutes on this one now just because there's a lot of questions that always pops up on this area. So main point, underlying point to always remember, dividends are a share of profits. Okay, so what that means is quite simply, if there are no profits, there are no dividends. Okay, so what that means is when you come to declare a dividend, usual scenario, you declare a dividend, you transfer the money from the business to yourself, and you fill in, hopefully you should be filling in a dividend voucher and the other bits of dividend paperwork. What I always recommend is you print off an up-to-date P&L balance sheet just as extra little bit of evidence that there was sufficient profit to pay that dividend. Certainly important if you're doing an interim dividend. Interim just means partway through your company year. So most people will do a final dividend. So at the end of your company year, you'll check how you're doing just before the company finishes and make a final dividend payment for the end of your company year. Interim just means you do it halfway through the year or at any point during the year and not necessarily the end of the year. So remember dividend rules. This is what I was just saying. Dividends are a share of profits. So if you pay out a dividend or you take money from your company and you say, well, that's just a dividend, that's fine. Yes, if there were profits. If we do your year-end accounts or we're doing bookkeeping and we see that you're taking dividends and there are not enough profits, these will be classed as an illegal dividend. Okay, so what will then sometimes happen is we will either say to you, look, you're taking an illegal dividend, or we will have to put it to your director's loan account. So what that means is you've essentially loaned the company, loaned that money from the company. Okay, we have to do this because you can't take it as a dividend, there's no profit. So we have to say it wasn't a dividend, it was a loan from your company instead. Now, again, there are then tax consequences of lending money from your company. So if your director's loan is overdrawn, some of you may have heard of that. If you have an overdrawn director's loan account, when we come to do your company's year-end accounts, you have to pay tax on that, okay? So only take dividends if there are profits. If you keep taking money, you will have to class it as a loan from the company, okay? And if at the end of your accounts year, you still owe the company money, then you will be taxed on that balance, okay? Something called S455 tax. So just bear that in mind. But anyway, the main point here is Sunday is the end of the tax year. That's your personal tax year, not your company tax year, okay? So what I'm trying to say is, if you were going to declare any dividends and you wanted them included in your 1920 tax return, personal tax return, you've got until Sunday to declare those dividends and put them through. Pension. So I've already mentioned that you've got your 40k annual limit, but don't forget, if you own a company, you can make payments from your company into your personal pension pot, and that is classed as an allowable expense. Okay, big point there, that money must clear before the 6th of April. So by the end of Sunday, if you do make a payment into your personal pension pot for the personal tax purposes, then that money must clear before the end of Sunday. But I put it on the company page because I want to remind you that if you pay a pension contribution from your company into your personal pension pot, it is an allowable expense. So as a really basic example, if your company made taxable profits of £40,000 at the end of the year and you didn't want to pay your corp tax, you could put 40k into your personal pension pot and then suddenly there is no company tax to pay. Okay, simple as that. However, don't forget, any money you put into the pension pot is stuck until you are pension age. Okay. A few points now before we finish on payroll. So obviously, end of personal tax year means end of payroll year. So just a few points to bear in mind. So for any benefits that you haven't put through the payroll, it's still the same situation. So what that results in is something called a P11D. Some of you may have heard of this. So if you have a benefit from your company, now that can be a company car, that can be private medical insurance, etc. Then you have to do something called a P11D every tax year. And once the tax year finishes Sunday, we've got until the 6th of July then to do the P11D, get it in, and pay any Class 1A NI on that. This is a little out of sync, so that should have appeared first. For employers to apply for authorization to voluntarily payroll benefits. So for the new tax year starting Monday, if you then want to start payrolling any benefits, you've got until Sunday to tell HMRC that you're going to be doing that. Okay, so that should be done in the prior tax year. So you've got until Sunday to tell HMRC that you're going to be payrolling benefits in the new tax year starting on Monday. What that means is you can put it through the payroll instead of having to do a P11D. Obviously, a bit of a moot point, but if you want to pay somebody in the current tax year, which finishes Sunday, don't forget you've got until Sunday to do it. Obviously, a lot of you would have already done your March payroll, so this is probably irrelevant to a lot of you now. But just a reminder, if you're going to be paying someone and want it to be in the 1920 tax year, you want it to be on their 1920 P60, then it needs to be done before Sunday. IR35. So this either relates to you or it doesn't. If IR35 does relate to you and you know that you need to do a deemed payment calculation, you've got until the 19th to do that calculation and then pay it, or the 22nd if you're going to be paying electronically. So these aren't so much deadlines to do by the 5th, but these are sort of just pointers that I want to make you aware of that happened and started as of Monday, the 6th of April. So Class 1A, I mentioned it up there. So Class 1A usually relates to benefits. So if you have company cars, medical insurance, etc. through the company, that is classed as you getting a benefit from the company. And on these benefits, you would usually end up paying Class 1A NI. But from the 6th of April, if you make a termination payment to an employee on your payroll and you exceed the exemption limit of 30k, you will now have to pay Class 1A NI, like you would on a benefit. You would have to pay it on that termination payment if it exceeds the 30k. Same with sporting testimonial payments exceeding 100. Class 1A will now be due on those payments exceeding that. Very niche, probably doesn't affect any of you, but you never know who's listening. Of payroll working rules, so same sort of thing as IR35 I mentioned a moment ago. Contractors who were hit quite hard actually by the news that from Monday, off payroll working rules, IR35 rules were changing. This actually probably, if you haven't heard of it, this was actually quite a major thing. So what was happening was any major companies or large companies previously, certainly public companies who employed contractors, so you'll find BBC had probably most of their people were contractors. Lots of other big public companies were hiring contractors, and that was always the way it was done. But from the 6th of April, the rules were supposed to be changing, which basically almost made it impossible or pointless for people to keep doing that. What we then started to see in the last 2 or 3 months was all these companies getting rid of people, getting rid of contractors, and it was having quite a big effect in those industries. So what's happened is that's been pushed back. So the rules will not be changing Monday, and it's been pushed back another year. So I'm hoping that a lot of contractors, certainly our clients, didn't take a hasty decision to change direction because of a new rule that was coming in. And hopefully they've held on long enough that they now can carry on for another year doing what they do. As I said, probably won't affect much of you, but if you're listening and this does affect you, it's good news. Hopefully keep going for another year until the rule then changes. Next point, employers' NI allowance. So if you have a business and you run a payroll and you have employees on there other than yourself, then you'll know you get employers' NI allowance. What this means is you're allowed previously 3k, but as of Monday, 4k per tax year. And until you reach that £4,000 of employers' NI, you won't have to pay any. Okay. However, the caveat to that is they're saying if in this current tax year about to finish, your employer's NI total is 100k, then they're going to restrict your access to that allowance. So it probably does affect a couple of our larger clients, but for a lot of you, all it means is instead of 3,000, you're now allowed £4,000 worth of employer's NI before you actually have to start paying any to HMRC, which is good news. So that's all I wanted to say, just some main points. As I said, end of the personal tax year Sunday. So don't forget, have a think about those things, whether it's related to personal tax or selling assets and properties or payroll. Have a think through. I have the notes from these slides. So if you want a copy, ask me and I can send you a PDF of these. This video will also be going to our socials, so Facebook, Twitter and Instagram, and now our funky new YouTube page, which is basically where all these videos will end up living once they're done. A lot of you have been asking me quite nicely that you'd like to send this on to friends, family, neighbours, anyone else who are self-employed or freelancers or own a company. Absolutely, I'd love that. So feel free to send them the link, send the email on. Happy to let them have this information. That's no problem. If you have any individual questions off the back of any of this, then just pop me an email, as always, info@stillfinancial.co.uk. Hope you have a good evening.